What's going on, everyone? We all know that this week will be one of the most exciting weeks in the market as we have a crucial interest rate decision, but not only that. We also are coming into by far not only the worst month of the year, but specifically the worst next 10 days of the entire year. In today's episode, we're going to go over all of the important things you need to know to capitalize off of the current market right now. Things are getting exciting, and on top of that, we have corporate defaults rising to levels not seen since 2009. So with that being said, Tom, let's jump right into today's episode.
Yeah, Mike, that market was actually pretty crazy today. We actually ended up moving to the upside when the market opened, but in pre-market, we were down a little bit. It was one of those really flat days, and I'm really not surprised as we head into the FOMC meeting that the market would go flat a little bit. You know, sometimes it does that ahead of these. Tomorrow, I think we'll get a little bit more movement, and then obviously Wednesday, I think we'll get quite a bit. And I will say I'm ready for September to finally live up to its name with that FOMC meeting coming up.
Yeah, so before we get into that, Tom, we have to talk a little bit more about this seasonality we have coming up. So looking at this data table on the screen right now doesn't look too pretty, I'll say that. So obviously in the rectangle, the red rectangle, we could see that in the month of September, from around September, we'll say 19th, all the way to the end of September, it is hands down the worst stretch in the market all year long, and this is with data going all the way back to 1950. So that's a lot of data, but basically it shows that we are really heading into a period of weakness. And Tom, I feel like this is almost like a double whammy here, because not only do we have seasonally one of the worst times for the market, but we also have a giant economic data release coming on Wednesday. So to say this week is going to be exciting, and even next week really is not an understatement. Looking a little bit more specifically at the event we have lined up this week, it is the FOMC interest rate decision set to release at 2 p.m. Eastern time on Wednesday. These events always move the markets. And then at 2:30 p.m. Eastern time, Jerome Powell, the money printing man, is set to speak. So, it's definitely going to be an exciting week. But what's even more interesting, Tom, is that over the past 2 years or so, every single time, for the most part, we've had one of these interest rate decisions, the Federal Reserve says, you know what, we're pumping rates even higher, right? But this time, it's a little bit different. We can see that there's a 99% chance that the Fed is just going to keep the rates exactly where they're at. They're just going to pause. And believe it or not, they're actually expected to just keep rates at their current level all the way till May of 2024, and then eventually in June, they're expected to start lowering rates. But this is a big shift that we haven't seen in a long time.
Yeah, we really haven't. I'll say, Mike, I'm kind of looking for the Feds to come out with some more info for us, because right now we keep seeing inflation tick to the upside, and it's one of those big things that the Feds have to address. Like, if they start seeing that go up, that might cause them to be a little bit more hawkish. So I'm going to really watch that this week. Maybe some of these probabilities will start to change and go up a little bit. I'm really looking for that November meeting to go up, and December as well, those percentages for a hike. And I think that Powell will give us a lot more info on that, and I'm hoping that the inflation scared him a little bit, Mike, because it just feels like that, where the SPY is right now, we have so many stocks still very high. Also, I feel like there's just a pullback, ready to come in here, and that inflation data is just so crucial.
Yeah, so we will see. And, just to reiterate, there's currently a 99% chance of rates just staying exactly the same. If Jerome Powell hits us with a little surprise here and actually hikes rates, that can stir up a whole lot of drama in the markets, and that would definitely bring in a lot of selling pressure. But we'll see what happens. Normally, these probabilities are pretty accurate, but you mentioned inflation, and when you mention inflation and Jerome Powell in the same video, they just go together. It's hard not to talk about how they relate. So Jerome Powell and inflation are basically the worst enemies, right? They just don't go together. We'll say that. And basically what we're seeing right now is inflation starting to uptick, right? Basically Jerome Powell over the past 2 years has just beaten inflation down. He said, all right, inflation's coming up. I'm just going to hike these rates. And so far it's worked and inflation's been coming down. But these past 2 months have, shown that inflation is not on the ground yet, right? It's still alive. And basically what we're seeing right now are gas prices and energy prices and just crude oil overall increasing quite a bit. And as we can see throughout history, whether it was in 2007 and 2008 or even, in 2021 for some parts, every single time we have a giant run up in crude oil prices, inflation ticks higher. And guess what we're seeing now? Crude oil is running up, and basically the entire world is looking at the U.S. inflation rate right now saying, you better stay down. And if it doesn't stay down, that's going to be a big problem for the economy. But then we also might even see more rate hikes that weren't even expected.
Yeah, exactly. That's the big thing. I hope that they actually give us some more info on what they're going to do here coming up at the end of the year. And so maybe those probabilities will actually change if they, get scared enough by this data. And I'm really hoping that they do that, Mike. Now, it's not for sure that they will. And I'm not saying that they're going to hike it this time, but maybe in November, December, maybe they'll talk about doing it then. But it's definitely worrying to see oil running up the way it is. Like you said, in 2021, in 2022, those oil prices got so high up there as that Ukraine conflict happened, and I'm hoping that we don't get back up to over $100 a barrel. That would be pretty nuts. Let me know in the comments where you think we're going to get. I actually love watching oil, and there's a bunch of stocks that move pretty good with them, like Oxy, XOM, or ZOM, and there's just there's even Gush, GUSH, which is a leveraged ETF for oil. That thing flies up when oil moves.
There we go. Now, Tom, one other thing that is kind of scary that's happening in the market and the economy right now that not too many people are talking about are the corporate defaults that are just surging behind the scenes. What we can see on the screen right now shows August defaults for each year going all the way back to 2008. And right now we are seeing corporate defaults at their highest level since 2009, which is the Great Recession. So obviously that is not good to see at all. And what's kind of scary is that the level of corporate defaults we're seeing right now is expected to continue increasing. So it's just a very scary thing that, when you have some people saying, hey, we're not going to have a recession, and you have others saying, hey, we're already in a recession, buddy. It just gives that, it gives that scary view, right? Because, no matter what side you're on, whether the recession side or the no recession side, when you see defaults rising like this, especially to the highest level since 2009, it's not a good sign. That's all I have to say.
That's crazy, Mike. The defaults are higher than they were whenever COVID was going on. I mean, that is pretty rough considering all of the problems that COVID caused in the economy. And I feel like maybe the Fed's rate hikes have been really starting to play a role here. So that's huge. And man, it's scary to see whenever you have defaults up as much as they are right now. And you go look at stocks and you're like, wow, well, SPY has been coming down a little bit the past couple months, but it's still actually fairly high considering all this data we've been seeing.
Exactly. Well, I think a big difference between now and that COVID problem would be the way Jerome Powell and the Feds are acting. In 2020, they were just spewing out money everywhere. They were just unleashing a tsunami of stimulus payments and all this just money everywhere in the system, and now they're taking it all back, right? They're turning the vacuum on, not the printer, they're turning the vacuum on, taking that money right back, and it's definitely hurting. So, looking at the market right now, it's definitely a different market than what we've seen over the past couple of years. And looking at SPY right now on a daily and weekly chart, it's crazy to say this, Tom, but we've basically been at the same level for almost 2 years at this point on SPY. And, in the short term, we're definitely seeing a strong battle between bulls and bears. In 2020 and 2021, bulls were in full control. In 2022, bears were in full control. Right now, it's kind of 50-50, at least in the short term. And I think this interest rate decision coming out in 2 days will definitely not make it so 50-50. I'll say that.
Yeah, I think so too. And looking at the SPY right now, there's a lot of key levels that we've been seeing. One of them is this key trend line that SPY's been following to the upside. We actually just broke below that on Friday, and man, that move down Friday was something else. If we end up getting under that key like 440 support here, I think we could go down quite a bit more here. So I'm gonna really watch the SPY, especially with that trend breaking, because we were on a pretty good upwards trend there for a couple of months until we finally turned around now. And I'm hoping that those rate hikes start to push us a little bit lower, but we'll see, Mike. Obviously, Powell's always a surprise, right? Sometimes he surprises us. Most of the time, though, he's really boring and just reiterates the same thing he says over and over and over. Oh, we're going to bring inflation down. We're going to try our best. It seems like he says that no matter what happens.
That is true. Powell has a magic way with words. Sometimes it's a bullish magic way, and sometimes it's really bearish. So we'll see what he brings for us this Wednesday. But Tom, I think it's now time for the fun stuff, which are some setups for tomorrow. One stock I'm watching very closely is UVXY. This stock is like kind of like a love-hate relationship I have with it. It's like most of the time the stock sucks, and that's just what it's designed to do. It's just designed to fall because, it's just how it's made, we'll say, right? But every now and then, people panic in the market. They sell their stocks, and the market gets all scary, and that's where UVXY comes into play, because this thing rises basically higher than anything else when people are panicking. So in the event Jerome Powell decides to tank the markets this week, UVXY would be a nice tool to have in your arsenal to the upside. So either way, I'm going to keep a close eye on it this week.
Yeah, I like that as well. Anything that hedges the market this week, I think, is going to be pretty big, whether it's SQQQ, UVXY, SPXS. They're going to be pretty important to keep an eye on here. And with my first play today, Mike, I wasn't here for a couple days, so I had to come in just to piss people off. I'm going to be looking at Tesla to the downside. And man, Tesla has had a good run here, actually. If we go out to the daily chart of Tesla, there is a long-term trend line that this stock has bounced off of 4 or 5 times. I actually marked it with all of these red arrows here on every hit that we've seen. And what are we seeing now? Another hit right as the rate hike and everything like that's going on. Now, I'm going to be very adaptable. If Tesla ends up shooting up, then I just won't play it. But hey, if we end up breaking down below this key 264 support, which is almost a low of day today, I will definitely look at more puts tomorrow. That was a pretty fun move at open.
Tom, I got to give it to you. That's a bold move. You go on vacation for a couple days and you come back with Tesla to the downside? Damn. But I will say this, though. I do like the setup, and I also really like how you just straight up said, like, I'll be adaptable with it. It's like if Tesla decides it wants to shoot up tomorrow or later this week, then it's like, it sounds like you're not going to force it. It's just like if the opportunity is there and if there's weakness in the market, and it's like if Tesla breaks below supports, then it can make for a good setup. And like you pointed out, it is bouncing off of a pretty strong resistance that it has overhead.
Yeah, really. And I mean, man, it's been trying to, even a couple months ago, back in July, they bounced right around $300. So it's going to be a big level to keep an eye on here over the next couple weeks. If we fail to break 300, it's going to be rough.
All righty. All right, well, my next one, I am looking at Meta, and this one is to the downside. Meta has been great over the past year, but over the past couple weeks, it has been a little bit flat and choppy and just kind of mixed. Right now, it is at this crucial $300 support level. If it breaks below that, I will definitely be watching it to the downside. And looking at Bookmap, that just goes to further, reiterate how important this level is. We can see a giant wall of buyers right around this 300 support level. If it breaks below that, the next major wall of buyers isn't really until like 295. So there's like a good opportunity with this one, which I do really like about it. And if you guys like this cool chart you're seeing on the screen right now, you gotta try out Bookmap. It's going to be that first link in the description in the comments down below. It is X-ray vision for the stock market. It's insane. You can see exactly where buyers and sellers are just hiding. You can't see that on normal charts. On top of that, these levels act as great support and resistance levels, and they take literally like 2 seconds to get, and it's like all real support and resistance levels, and Bookmap is just awesome. If you do want to try it out, The link in our description and comments will save you money. We do have special offers attached to that link, so save yourself some money and use the link down below. But either way, Tom, I will have a close eye on Meta to the downside.
Yeah, that $300 area is huge, and there was even 2 intraday bounces there today. So definitely a big level to watch over the next couple days. And man, with my next one, Mike, I'm going with Nvidia to the downside too. If I didn't make him mad enough with Tesla, well, here we go with another fan favorite. But I'm definitely watching Nvidia and AMD. I wanted to mention both of these. AMD is right at a key $100 support, and if we actually go over to Bookmap on AMD, that's another one that just has huge walls of buyers at 99 and 100. So watch for AMD below 100. Watch for Nvidia to fall below 430, 425. Those are going to be some big levels for the next couple days. But man, that $100 level on AMD is just scary.
All righty, good stuff. Well, Tom, it's now about that time for the momentum plays. And with the first momentum play, we have Shopify to the downside.
SHOP. Go ahead and look at them to fall under that low of day, right around $59.40. That'll be a good move tomorrow. And if it falls, man, it fell almost 5% today. So definitely watch it.
All right, with the next one, we have Tesla also to the downside. Sorry, Tom, I stole this one from you.
Go ahead and make him break under 264. It's a big level. 265 is pretty big too, but I would be a little bit safer with this one and make him break 264.
All right, and then with the last one, we have Apple for both directions.
Yeah, Apple was wild today. It was one of the few stocks that actually ran up in a good way. So looking at them, if they break out above 179.50, definitely watch 180 after that, and I'll look at calls. But if they end up moving to the downside under 177, then I'll go ahead and look at those puts. There's that intraday support right around like 177.50, so I will watch that for a breakdown.
Yeah, that is true. Like, the market was kind of weak today, and then, like, Apple just like, screw you guys, I'm going up by 2%. You know? Like, a lot of these other stocks were, like, relatively weak, whether you're looking at Meta, Microsoft, Amazon, Tesla, stuff like that. But, yeah, I guess that's why they call Apple the powerhouse, right? It's just a beast.
Yeah, and they had that good event last week as well. So, yeah, go ahead and watch for them to break above 179.50 and below 177 to the downside. It's going to be a fun one. You know, they just had that event, like I said, with those new iPhones, too. Maybe that'll garner some more attention.
We shall see. So we have the upside level for calls, downside level for puts, and then don't forget about Tesla and Shopify with their downside levels as well. But it is now time for the big money $950,000 trade of the day, and it is with Disney. Tom, I don't know if too many people can handle this big money trade today because it is far out. So basically, this option expires in January, on January 16th of 2026. So we have some time with this one, but bear with me for a second. Basically, someone dumped, we'll call it $1 million into the Disney 120 strike call options that expire on January 16th of 2026. Obviously, this play has a ton of time. Disney's at a very historical and low level right now. And overall, to me, this is just like a longer term trade made by the hedge fund or trader who made this. Obviously, this $1 million trade is betting that Disney stock will go up. I do like the setup, but at the same time, I do think it would be smarter to get closer to the money. Like, instead of the 120 strike, maybe like the 100 strike or something like that. I don't think you have to go all the way out to 2026. Maybe you go out to like 2025 or probably like 2025, or even just grab shares of it. But overall, I do like Disney at these levels. But if you do decide to play it, the biggest thing I can say is just give it time. Don't expect this thing to go back up to 150 tomorrow. You know, give it time and let the stock do its thing. And I think it has a good risk reward setup.
Man, there's been a lot of big money plays on Disney lately. It's actually filling up the chart how many that there's been over the past couple of months, especially like around September. You know, there was the 80 strike calls. They had that spread that they got in as well. So I'll definitely be watching this one, the 120 strike. With how far out of the money that is, Mike, I'm a little worried they're shorting that. But with how much time there is, boy, you would think that Disney would be above 120 by 2026. If Iger doesn't turn it around by then, I'm going to be worried about my Disney shares.
Yeah, exactly. It's like we're giving you to 2026, get your stuff together. It's like Disney stock has been pretty bad over the past couple of years. It peaked around that like $203 level back in March of 2021. And basically ever since that point, it has just been a constant slap in the face to Disney shareholders. Now Disney's at 85. It didn't recover at all year long, while so many other stocks at least had somewhat of a recovery, let alone some other stocks making new highs. So, we'll see what happens with Disney, but overall, I do like it at this level, and, we will see what happens. But Tom, with everything being said this week, volatility's here, not only with the FOMC interest rate decision, but also we're literally in the exact worst part of the year for the market, so that should be pretty exciting. Do you have anything else on your mind or any other setups you're watching?
Yeah, we kept talking about it. The 18th or the 19th through the 30th or 31st is definitely the worst days, and we've been talking about it for a little while. We've been kind of preparing a little bit. Keep your eyes on SQQQ, of course, this week, UVXY, SPXS. I think it could be good, especially if you have a lot of longer-term shares. It would be a good hedge. So I'm really watching these inverse ETFs, Mike, and as we go forward, that event is going to be huge Wednesday. Definitely watch 2 p.m. and 2:30 p.m. Eastern Time. Whenever Powell speaks, he'll probably give us a lot of key insights.
Let's go. Well, guys, let's have a great week. Last week was pretty exciting, and let's keep this momentum rolling. There should be a lot of great opportunities. Keep those position sizes in line, we'll say. I know some of you guys get a little bit too crazy during these times, so keep your position sizes reasonable. Keep those stop losses in place, and let's crush it this week, guys. If you are new to the channel, absolutely demolish that subscribe button. When you do, you'll see our videos recommended to you more often. Basically, it takes us hours to make these videos. We go through a bunch of research, news, and everything you need to know in the market to hopefully make it easy for you guys to watch like a 20-minute long video and just know everything you need to know. On top of that, in every single video, we cover predictions and setups for the next day. So why not join the Stocked Up crew? But besides that, guys, let's have an amazing week.